Hello, my friends. It is time for our second week Sunday trade recap of last week and the trade anticipation for the week going forward. It is 7:24 p.m. Eastern Standard Time, 7/14, 2024. So it's July, right? Yeah, July 14th, 2024. And I'm gonna get to this one pretty fast. I got the way I want to get it done, so that's what we're gonna do. So first and foremost, actually, I just need something. Okay, here we go. So last week, just like this week, where nothing has changed in my opinion. We're still bullish on the bond. I'm starting off this week right here on what I start off the week with every single week, and we'll start off the week every single week, not just for these videos, but in my own trading. We're starting to look at the historical seasonal patterns for the bond market. I would do this for any market. If I was trading the index, I would do the same thing. No matter what market I was trading, I would do the same exact thing. So we ended the week last week historically. We usually end that week bullish. I'll let you guys see if we did that or not. And typically this week has a low made. This is pretty much a correlation between both of the assets. There's a low made this week, so this is the third week. There's a low made the third week of, oh my gosh, sorry guys. Anyway, small mishap because we're definitely in July. So get back to it. Basically this week we typically have a move up, slight consolidation type of move till the end of the month, and then we go higher. So what does that mean for me? For me, I'm going to continually anticipate that we're still bullish. We could see a brief move of like a SMT type behavior between the assets, where the 5-year and the 10-year move up, and then the bond has to go to a low first. One of those types of things. But the 15-year correlation usually goes up, has usually gone up, and then the 40-year correlation typically has a small minor high made this week, and then next week we have like a consolidation type of area movement, which correlates with the fact that we have some. So basically what I'm saying is, historically, seasonally, it says that this week, and I'm going to include the prior week, this or the week after this one, this week and the week after next, or the week after this one, typically makes some short-term high, then we make a short-term low. So with that being said, this week could have bullishness, in my opinion. I'm assuming that there's going to be bullishness on Tuesday, Wednesday, Thursday. On Thursday, I'm expecting we're probably going to have some type of short-term high made, and then that's probably going to be the high for the month, if I'm correct. We could just blow straight through it. I'm bullish, so whenever you're trying to forecast a move that's opposing to the higher time frame, daily or above movement, you do run the risk of always, just being incorrect, because it could just continue to blow forward. I'm gonna go over the charts, and then you'll see this a little bit more drawn out, like on the actual charts. But again, this is just like a template. This is something that like we have in the back of our mind. We're still bullish seasonally. However, there could be a brief pause in the bullishness. That's basically what I'm surmising from this. We're gonna go to the intermarket correlations. Intermarket correlations pretty quick here. There's nothing over 90% except for the 5-year or the 10-year. So we're just gonna continue using what I normally use, the bond try it, and keep it pushing. Now into the charts we go. Let me pull up this other chart here. So like I said, we don't normally go through the monthly chart, so we're not gonna do it usually only do that on the month, like at the first day of the month. But we're well into the month, so we don't gotta do that. So we're gonna see how we closed last week. Last week we closed bullishly. Remember, I was looking for these highs. We still haven't had these highs taken, but from when I looked at the market, which is around at 1821, to where the market drew all the way up to, we had about a handle, and so we had about 50 ticks. So a handle and 20 ticks, which is pretty good. That's about $1,600 per contract. So if you would have taken something at the open and held it all the way to the high, you would have gotten, around that much. But obviously we don't look at the price like that. We're just looking to see if every single week, every single day, every single session is price continuously looking like this is a magnet. Is price continuously going up towards that? The reason why up towards this is because my bias is that we're bullish and that this high is the draw on liquidity. So done with the weekly chart. There's really nothing in here that I have to add. We have all the arrays in here that I already like. There's really nothing in here I would need to add. We have just a drop down, came back up. I'm looking for once this is still the big crux for me. Once this is rolled over, if it's rolled over, because what I'm about to show you guys next up, if this is rolled over, we can see heavy expansion. Like the moment that this is rolled over, the week after, or even in that same week, I'm expecting very big candles like this, candles like this, candles like this. So just note that still bullish, nothing has changed. Daily chart. Daily chart is here. When I did my last commentary or my last video, it was 7 days from today, which means it was the 7th. So it was around in this candle. Like I said, we opened around here. And since then we had a brief consolidation period, and then we drew up towards those highs, but we didn't get them yet. So basically, whenever I do for my own trading, whenever I have a level that's on a daily chart that I'm anticipating getting hit, even if it doesn't get all the way to that level, if this is based on a daily chart, every single day intraday, like the sessions, will give me opportunity to make profit as it's going to that level. I don't buy down here. If I was like a swing trader or something like that, that'd be okay. But typically, I'm liking to buy every single day when I'm bullish buys at the right time, knowing that the magnet is up here. It doesn't have to get all the way up there, but I just want it to be pulled up there because that's when I can take advantage and trade what the day is doing that. So that's pretty much it as far as the daily chart goes. We had a drop down on Tuesday. I'm gonna mark this out for you guys. Into this gap here, a little small gap. Let me change this real quick. So a real small gap in here. It'll be more prominent on the lower time frames for sure. But there definitely is a small little gap in there we dropped down into. Filled it, overshot it a bit on Tuesday, and then we continue forward. So we're gonna get to the 4-hour chart first, and then we're gonna quickly get to the 2-hour chart too. So here is our 4-hour chart right here. And like I said, let me put a day for where we started last week. Started last week right here. I did the commentary around this time, around this candle, and you see from this candle to where the high of the week was, we did in fact go towards these highs. We didn't clear them, but we did go towards them, like I was just explaining from before. So what I'm looking for, and then we're going to talk about this in a second. What I'm looking for, and as I said last week, let me open up the economic calendar too. We're going to go to last week's price, or last week's calendar, so you guys can see what I'm following along with, basically what I was saying. Last week was a landmine type of week. I actually didn't trade Monday, and so like I said last week, my goal was to take every S-tier setup that I saw. Every single week I'm going to be grading myself in front of you guys for accountability purposes. This week I had I would say a C in that grade, just because I didn't plan to trade on Tuesday because we had the Fed Chair Powell speaking, and then we had was this the, let me just go to it so I don't. So on Tuesday we had Fed Chair Powell speaking, And then I was not at the market to trade the PM session because I was working. On Wednesday, we had Fed Chair Powell again speaking, and the only trade would have been something on Wednesday at the PM session because we had that note auction and because Powell spoke in the AM session. We really didn't have too much as far as like, I'll go to the intraday chart so you guys can follow along, but we didn't really have too much on Wednesday. Thursday, we had CPI, so obviously not trading CPI. And then after CPI later in the day, we had a 30-year bond auction. We still also didn't really have anything on Thursday anyway. So the reason why I give myself a C is because really there's two S tier setups that afforded themselves for me this week. One was on Monday. And the reason why I didn't trade on Monday or didn't even plan to trade on Monday, I actually went to sleep during the trading session on Monday, is because I'm still getting more understanding, and this last week was a really good week for that, so I'm happy that I did go through it. I'm still getting more understanding on when there's a vacuum of high economic news, but there's heavy news later in the week. So last week there's heavy news pretty much every day besides Monday, right? Monday can have some of the cleanest, and this is something that ICT has talked about a while, but again, you have to see it multiple times. Monday can have the cleanest price action, and it makes sense because the algorithm, smart money, is allowed to make their transactions before the central bank starts to manipulate the markets heavily. And especially I'm trading interest rates, so obviously Fed Chair Powell speaking throughout the entire week, and two of the biggest news events that they're watching for inflation numbers and things and interest rates were happening throughout the week. So Monday was actually a really good day to trade. So there actually was an S tier trade afforded that I wasn't at the screen to take. So whenever you go through something like that, because you don't want to live in your losses. Missing moves is a loss. Taking demo trades and losing is a loss. Taking monetary losses from like live accounts or evaluation accounts is a loss. But you don't want to live in those. You want to ask yourself, what can you take from this loss so it doesn't happen again? So for me, the thing that I made myself do literally after Monday and seeing the easy, clean price action was I made myself every single day. It's something I typically don't do. Every single day, I locked in between 8 to 9 a.m. And I didn't trade every single day, but I locked in to watch the market just in case something was afforded to me. Even though I still didn't plan to trade on Tuesday because there's Fed Powell, didn't plan to trade on Wednesday because there's Fed Powell, didn't plan to trade on Thursday because there's CPI. I could trade after 8:30 on CPI, but we'll get to that day and see why I didn't take any trades. But just want to go into all that. I ended up trading on Friday, and going forward, I'm going to make sure to upload the videos on the same day that I take them. But today's going to be that last, I'm not going to say last, but today is going to be hopefully the last time where I upload a video from a previous day on Sunday. So there will be 2 videos uploaded today as well. This video, which I'm going to really keep shorter because it's really quick and easy. I'm just going over some things that are already easy to see. And then the trade session recap where I took 2 trades on Friday, and you guys will get to actually see me take a loss and how I go about taking the next trade after taking the loss. So that's really good, and had a lot of inner musings in there, so I really got to get that video out because that's a really good one. Basically, Monday was a great day to trade, and again, I'm going to go to actually can just do that now because you guys already see we pretty much consolidated for the beginning of the week. Then we were released to go on Thursday, and then Friday also had a little bit of a move up, but nothing too heavily. Now we're going to go to the intraday charts. So I'm going to go to Monday. Monday is here. Monday's here. So when I say there's an S tier setup, let me get this. I'm going to cut all these stuff off. Go to Monday. Go to Monday. Go to Monday. Okay. Go back to this chart. Now, the reason why Monday had a clean S tier setup was first we have a draw on liquidity. That's always the number one. The the entry mechanisms, the entry patterns, if you want to call them that, the entry array, whatever you want to call that, that is like one of the smallest things. The biggest thing is, where is price going? Obviously, you guys know that I was bullish, and I already put up from the daily chart that level, which was 120.24. Where are we here? We're at 118. That means that there's much to go further up, in my opinion. Now, we don't want to just put a long down here and then say we're going to get 120.24 today. No, you got to look for the intraday price. So here was the intraday, or the previous day's high. This would have been the draw on liquidity for that day, Monday. Now, if you look at Monday, we have a drop lower in the London session, which is between, this is actually a little bit after London session, because London kill zone is 2 a.m. to 5 a.m. We have 5 a.m., so this is in the bond kill zone. So we have which is 3 a.m. to 9 a.m. We have a drop lower, makes a low, doesn't take out these lows, makes a low, comes back up, 7 a.m. So we have now New York opening session coming, drops down, and bond opening session starts at 8 a.m. So at 8 a.m. we have this retracement here, and I want to show you guys something, the reason that makes this a S-tier setup for me. So if you look closely, I'm going to zoom in so you guys can see exactly what I'm looking at. Zoom in closely. Zoom in closely. Okay. So we have a retracement here. There's that same retracement from right here. We have a retracement here, which just means we went up. Now we're coming down, but I don't expect this to just fall out of bed and go lower. This is just to go down, to go back up later. That's what a retracement basically means. We have a retracement here. This is where you want to keep your eyes at, this low. We don't expect this low to get taken out. However, we can use this. Just want to put that right there. Okay, so we have this drawdown here. We have a fair value gap there. This is model 13. Have an order block with a fair value gap there. This is still model 13. And you have a fair value gap all the way up here. Which one do you want to take? The one that is at or below equilibrium. So we have one that's at or below equilibrium right here. So you could really take this one, or if you really want to be, if you really want to have the lowest amount of risk, but the higher possibility of missing the trade entirely, because you might just not get filled. Even though it goes there, you might not get filled there. So you could take this one, stop below there. That's 5 ticks. That is a bread and butter trade for me. Now, but I want to show you guys is, look how here we match these lows. Same exact time. This is the 5-year. Same exact time, but we matched the low. Versus here, we really were nowhere near the low in the same like spectrum of looking at from here to here to here in this area. Here we were closer, almost, we were literally 1 tick off or 2 ticks off from matching this low, but here we matched this low. This is enough for me to qualify it as an S-tier setup, because this is that SMT. This is that when big banks and big money put their money into the market, they're not doing it in one market, they're spreading out their risk. So if a big BlackRock or a gigantic bank is investing in stocks, they're not going to invest all their money into one stock. They're going to invest something into tech, they're going to invest something into industry, they're going to invest something into medicine. So like if you were to look at that between the index, so like the NASDAQ, the Dow, and the S&P, you're going to have the 500 composite, which is the S&P. You're going to have the NASDAQ, which is the tech stocks. They're going to have a YM, or the Dow, which is industry. So what you're going to see at certain times is when big money is investing, there's going to be times where they're going to spread their risk. So one of the averages that you're looking at, because these are all averages, one of the averages that you're looking at is going to diverge from the others. So let's put it into perspective what we're doing here. We have a big gigantic bank who's investing in interest rates, who's investing in bonds, who's investing in T-notes. They're going to spread the risk about, but they know that bonds and T notes should be moving in the same direction most of the time, especially when you're talking about 30-year, 10-year, 5-year. So what they're going to do is they're going to spread their risk. What that is seen like in the market is they're really looking to get in here and buy, okay? And the market isn't moving because they're buying it. They're being allowed to buy it at certain levels. So across these three, what's happening is the 5-year is showing, okay, this is allowed to go lower. This was allowed to go lower, but wait, the 30-year, which is the one I actually enter on, they're not allowing this to go down there. This is showing a lot of strength in the 30-year. Plus the Model 13 setup, which is in the description. And I'll do like a little bit, I don't want to say I'm going to do teachings about that because it's literally, ICT taught it in 41 videos, all free on YouTube, so clean. I'll more likely do like a little bit of rehashings. What I'm really want to do mostly is focus on like the psychology of getting over fear and greed and showing my like accountability and steps. So like how I actually look at the market and execute on it. But just so you guys know, as far as trading goes. But so this to be qualifies it as an S tier setup. I'll link a video detailing SMT more because I did a down and dirty approach of just explaining it. So you're not gonna be able to explain that in 3 minutes. But I will give you guys a video from ICT's channel where he specifically talks about smart money divergence or smart money, SMT, which is smart money divergence. Anyways, so this is a S tier setup that I was not a part of. I did not take this trade. Now we can go back to this chart. After Monday, look how the market starts to trade. We're bullish, but Tuesday, it's a bearish day. Gives me no setup to take. So I took nothing here. And also I didn't take anything because I planned not to trade in the AM session because Powell was speaking at 10 a.m. and it doesn't behoove a non-gambler to trade before a Fed speaker. So just put that out there on the same day. I'm saying like you can trade on Monday, but not on the same day. So here I didn't take any trades. Pretty much drop lower, drops below this daily low, these relative equal lows, a little bit further down, and then makes a low, continues to come up. Then we have Wednesday. Wednesday again, not trading, Powell speaking at 10 a.m. We have a move up in the London session, carry over into the AM New York, so 7 a.m. Then we drop down and make another low. Powell speaks at 10. So around here we have a little bit of reaction from Powell speaking. Just drops back lower into the opening for that day. Stops on a dime, continues to go up. But this is really ugly. Like this is very back and forth, gross consolidation type trading. But we expect this because not only did we have Powell talking today, the next day was the cream of the crop, the biggest news event of the week, which is CPI. CPI, even, and I watched this live as it was happening. And this is one of those times where you could be lured into thinking you're okay to trade CPI. Cortland, you were expecting prices higher anyway. You told yourself that you were gonna not trade any other day besides Monday. It was really, really easy, but there was no news on Monday, so you wasn't sure if you were gonna trade. And you said you're gonna trade on Friday, but you said you also could trade on CPI after 8:30, which is the news event. So I could trade at 8:31 afterwards, which was still a thing here. However, there was no S tier setup offered here. As you guys can see, this S tier setup has to have that SMT there with Model 13. So here we have, but it's the same exact thing here. We have a drop lower, and I will even show you guys that there was a S tier setup before CPI. So this stuff works, or I'm not gonna say works. So I don't at all invite anybody to trade CPI and say Cortland said it works. The same market conditions, the same market mechanics happen on CPI. The market doesn't stop working like it normally works on CPI. You just have the ability to get absolutely torched. If that makes sense. So if we take all this off, we see the same exact thing. We drop down. There's a fair value gap here. Clear the high. Well, clear low. Fair value gap inside of this movement that cleared the high. Boom. There's also one back here too. Made a low. Well, clear low. Moved up past this fair value gap in here. So there's two fair value gaps, and there's the S tier filter, basically just showing you this low at 345 was taken out at 8 o'clock. This low at 345 was not taken out. It was matched. This low at 345 was not taken out. It was higher. So that gives you that, okay, big money players are spreading their risk out across the 3-day instruments at this point. And you see how it affects you, or how it ends up playing out. I mean, this is in one day, 1,000, about $1,600, $1,700 in 2 hours per contract. But again, I don't want to invite anybody to trade CPI, but this is good to see that these things are still happening, and the market is still respecting these levels during CPI. Like all this stuff was made before the day was gone, but I was watching it saying, okay, this is what I'm expecting to happen, but in no way, form or fashion am I going to trade before this, because just like we had this gigantic 132 tick handle move within a second, we literally could have had the opposite happen. And stop losses is not saving you right there. Like, just want to be completely honest. I work at a trading company. I have seen it never fails. Every single week that there's a high impact news event, we get hundreds and hundreds of people saying, why didn't my stop get filled? Why did I run past my stop? Why did it do this? First thing we look at is what time were they trading? And 80% of the time, 90% of the time, we already know it's going to be at 8:30 or at 10 a.m. or on FOMC days at 2 p.m. Eastern time. All those are Eastern Standard Time. And it's because these news events, dude, like, they can come out and your stop could be, if you're short here and you got to stop like right above this high, or let's say you got to stop right here. The news comes out, dude, your stop is not getting filled right there. You're lucky if your stop gets filled here. Even here. like you could immediately be torched. You will immediately, I could actually guarantee you will be torched. Your account is done. So it behooves you to just note that, okay, I outlined this before it happened, and even on a day as volatile as CPI, it still panned out how I was expecting it to, towards the 120.24 level. It didn't get there, but it's moving in that direction. So what did that do for me? On Friday, I plan to trade. So on Friday, I come in, I'm really looking at, let me go, sorry if you heard my dog cough in the background. I was looking at himself like a cat. So I want to kind of clean this chart up so you guys aren't looking at so much stuff. Okay. So let me take this. This is the fair value gap made in this on the 4-hour chart, but I'm going to take all this off. Not all of it, but I'll leave this. Okay. So coming into Friday, I'm okay to trade PPI. I know that with this gigantic CPI movement, we're going to have most likely a lower movement, or not like lower as in like lower prices, like all the way back down here, but a lower smaller volatility is a better way to put it. So on you, and you will see me trade on Friday. I'm going to post that video, so be ready for that. But basically on Friday, let me do this. On Friday, I plan to trade. So I come into the trade and I'm looking, okay, I'm like, okay, what? And you'll hear me talk about all this actually in the video because it's live, obviously. I'm like, okay, my initial plan, because I actually ended up trading overnight on an eval account. My initial plan was to get in here, and I did around this area, which is an S tier setup. The reason why I give myself a C this week as far as taking S tier setups is every S tier setup that I see is I should have been locked in the market every single day. This is like a business. You got to run it within your business hours. So when you find that kill zone that you like to trade, that session that you like to trade, you got to be locked in during that session. Unless you're planning ahead of time not to trade, you're taking some time off trading, that's all good. But on my notes from last Sunday, I wrote word for word, this for Monday 8th. Heavy news later in the week. Monday could have easy macro-based trading. That means that I need to be locked in on Monday looking at the chart, not sleep. So for me, that's one reason why I'm giving myself a C. The second reason is I took an S tier setup here on my evaluation accounts, but I didn't take the same exact setup on my funded accounts. Now, yes, I typically do only trade from 8 a.m. further. However, because this is the bond kill zone, and because there was a clear S tier setup, let me actually show you guys the S tier setup. Zoom in here before this wick, zoom in here before this wick, zoom in here before this wick. Look at this. Drops down, clears these lows. Boom. Okay. Drops down, does not clear this low. Already qualified. But in case you needed a little bit more of a push, drops down, doesn't clear this low inside of a fair value gap here. Okay. So this is why I entered on my funded account, or not my funded, on my evaluation account, in this area, inside of a fair value gap, which was this. But this is a pretty fat fair value gap, so I entered like based off of this order block. I entered at 119.13. Now, you won't see that trade because it's from way later in the night and I'm only recording the AM session. However, the reason why I'm rating myself as a C is because that trade, I should have took that trade in all my accounts because it qualified. Because it still was in the kill zone, bond kill zone. It had the S&T, and because I was at the market a little bit earlier than normal, I didn't. So that was a fault of mine. That's why I'm classifying last week as a C day, or as a C week as far as like grading myself on trading. Now, what that also had me do is during the AM session or during the opening session where I really would have been done trading already, got my 10 ticks and been done, it had me looking for trades, later on. And you'll see in the video that I ended up taking a loss right when PPI came out because I made a second mistake of the week. And this leads me into my trade report card for, I already got it keyed up. This leads me into next week. Here's cool. This leads me, let me open this up for you guys. This leads me into my focal point, my trading theme for next week. It is listen to my first voice, not just listen. Execute on the first voice immediately. The first voice, where I'm not actually sure if I had it. I'm pretty sure I did. Maybe I didn't. But on the funded accounts and my other platform on Quantar, which I usually have side by side, but I don't show both of those screens. I only show the TraderBait account. I had a limit order at 119.10. Why? Because I was expecting that PPI comes out, we could definitely see a clear of these lows, but I didn't want to see it go too much further than that and then go up. My normal stop loss is 5 ticks. From here to clear this low to here is 4 ticks. But what I did was I moved my stop up, or I moved my limit order up 1 tick. And this is why, and this is something that obviously, and if this may not happen to all of you guys because you guys are gonna listen to your first voice. It just happened to me a couple of times, more times I would like to admit, that I moved something up literally just 1 tick based off of fear of missing the move or whatever random thing I want to pop up, and because of that I got stopped out. So because I moved this up, immediately when 8:30 comes out, I get stopped out, and it takes me about 3 to 4 minutes to reset myself, to war with the thoughts in my head of, oh my gosh, you knew this was going to happen. Why did you move your stop up? All those types of negative feedback, not saying it out loud, So you guys are gonna hear me say a lot of positive things, a lot of like, in my mind, this is what's going on, but not voicing the negativity, only voicing what did I learn from this. Because I did that so fast, I was able to enter again with the A plus setup, which is just the same setup, Model 13, without the SMT. So I end up entering again in here and then making half that loss back that I took right here. So that's what you're gonna see in the video. So I just wanted to go ahead and give you guys a approach of how I expected, what I expected, but of what I've expected, what I executed on this week. And in the last 5 minutes, I really wanted this video to be 25 minutes, but every time that I do it, you guys can also always watch it at, start the video and watch it at 2 times speed. And then after 2 minutes, you could change it to 1.5 speed and your brain will pick it up as normal speed. So if you want to brush through it. But yeah, so basically you'll see that in the video. I'm going to post that today as well. So both of these videos will go up. You'll see that trade I was talking about. You'll see the interviews and all that type of stuff. But I just wanted to give you guys like a day-by-day approach of what I looked at. The things I did really well this week was after Monday, I clocked in every single day. After Monday, I really focused on what I wrote when my head was at the purest. So Sunday, before I started trading, I followed that. Another thing I did really well is on Friday when I took a loss, but because I planned literally on my notes, it says for Friday, easiest trade day of the week, save risk for this day and trade twice. So going into Friday, I knew that I was going to trade twice. I was hoping it would be for 2 wins, but 1 loss and 1 win was what ended up happening. So I was able to follow my rules really correctly in some aspects. Another thing I didn't go on tilt when I took a loss. And I risked appropriately. So those are all really, 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 really good things. Like I was saying last week, you always want to have more good things than bad things. So you really want to really put a big, gigantic magnifying glass on the good things. And on the bad things, you just want to take your breath. What can you learn from this loss that helps you so it doesn't happen again? So real quick. And then the second is really put a big magnifying glass on things you did good. So real quick, what I'm expecting to happen next week or going into this week. I was going to talk about this too. We had a pretty gigantic drop. Like this is literally from today. Like this is normally, we don't normally have things like this on Sunday, but this is why, it doesn't behoove you a lot of times to hold over the weekend. But anyways, we moved $1,000 per contract, 32 handles, actually more, a handle and 5 ticks off the open. So for me, this is clean. I'm gonna go to the daily chart so you can see, because this looks gigantic here, and it is a pretty big move, but on the grand scheme of things, it's actually not that big. Let's go to the daily chart. Daily chart, we dropped to this. This is Sunday right now. This candle is literally right now. I'm gonna take all this stuff off. This candle is literally right now. This is from what happened within the last 4 hours. We dropped down and we dropped into this order block and this fair value gap. I'm still expecting prices to come back up here. What makes that wrong? If we clear this low and stay below it, I'm incorrect most likely. And then we'll probably have some consolidation, which goes into what we're talking about in the beginning of the video with the seasonal. And then you also have to take into account that same low that I was expecting in the bond got destroyed this week. That same high I was expecting in the bond got destroyed this week on the 10-year and the 5-year. So they were stronger. They cleared out that low I was expecting, or cleared out that high I was expecting. Sorry about that. But yeah, so I don't really see this as anything too crazy to look at. I really would like to see price not go below this order block. Maybe we have some sort of SMT right here, but it would have to do it fast. Like it would just have to be like a wick and then boom, like to the races. But honestly, I would like to see if Monday can go a little bit lower, Tuesday makes a low, and then we start coming for this. But we'll see what happens. I'm still sticking to the guns and expecting these highs, and then we'll see where we go by the end of the week. But that's pretty much it, guys. Going into this week, I'm going to recap. My focus is to take the first voice setup. So that is, it's either going to be an S tier setup or A plus setup, S tier setup or A plus setup, whichever one shows itself. That's what I'm taking, and I'm taking it immediately when it pops into my head, because everything, all the heavy lifting's been done with me getting the wisdom on the actual setup. So there's no hesitation or reservation or speculation needed once it shows itself in the chart. So that's my focus this week. Take every S tier setup, every A setup that I see, and take the paramount importance is taking the first voice setup. So the first time that I look at the chart and I say, okay, this is the, or I get convicted, this is the trade you should take, I'm clicking that button within a second. That's how I'm grading myself this week. I'm not grading myself based on wins or losses. I'm grading myself based on that. So hope you guys found this video insightful, helpful. Do remember, as per usual, God has a plan to make your life as if nothing ever went wrong, and He loves you. I'll talk to you later. Bye.